Still with us, the great Taylor Riggs, co-host of The Big Money Show, right here on Fabulous Fox Biz, right here on set with me. Thank you, Taylor.
Always.
And my longtime pal, Conrad Dequadros, Citi Wealth head of economics, one of the best on Wall Street. Okay, Conrad, I'm just saying, put aside the ideology, put aside the politics, just the basic economic story. Now, you know, it's hard to tell that story. Not everyone wakes up in the morning and worries about durable goods reports the way we do. All right, I get that. Not all shopkeepers, not all hardware stores in the Bronx worry about, retail sales or something like that. But the fact is, the economy is booming. And people are spending, and their real wages are rising. I mean, what is this? What did I see today? The Atlanta Fed 6% growth in the third quarter. Anyway, what's your take?
So it does matter to everyone, right? And you talked about profits and earnings. I think some people can think that that's really a focus for people in the stock market alone. But it's those profits and earnings that drive businesses' decisions to invest and to hire. And so all the evidence that we've had over the course of the last week, whether it was the GDP report, where some people talked about the 1.5% growth rate being below expectations, you look at the details of that report with strong consumer spending, very strong business investment. The details of the report were extremely strong. And I think that's driven by the earnings and corporate profits that we're seeing companies report. If we look into the third quarter, we're starting to get July data. We had the ISM yesterday, 4-year high on the manufacturing ISM. I think a lot of that has to do with the CapEx cycle that we're in also. Orders are stronger, employment was stronger. These are numbers that we focus on as economists, as people in the markets focus on it, but it is very important to everyday Americans.
You know, Taylor, listening to Conrad, and also your reporting, the doomster, there's a gloomster doomster group. And it centers, no, thank goodness, but it centers around the AI story.
Yes.
Okay? But the reality is, we had David Sachs on weeks ago talk. The reality is jobs are rising, not falling. Now, I'm not saying that there isn't some transitions in some certain places. But the second reality is we are seeing construction commercial construction, like we've never seen before.
Yeah.
Yes, it's these power plants and it's these data centers. They're all self-contained now. They have their own ways of dealing with utilities and energy and water flow. But it's creating jobs for welders, for carpenters, for people in the trades. That's a wonderful thing. And I don't care about the consumer confidence surveys. They're all bad because they're all run by Democrats, if you ask me. But putting that aside, people are spending. Consumer spending is above 3% at an annual rate steadily. So this is a turning point. Now, I put a political spin on it because I want the GOP capitalists to win, and I want the Democrat socialists not to win. But the point is, stocks are telling you things are doing very well.
Yeah, so one stock I love to watch right now is Caterpillar, because it used to be this old, sort of industrial gauge on the economy. Caterpillar is an AI story. Revenue is up because they're building the construction boom that you're talking about, in part because of the AI CapEx cycle that we're in, but also they're providing power and generators to help cool off the data centers. And so when Caterpillar crushes earnings and revenues up double digits, you're thinking, is that a gauge on the economy, or is that now also an AI story? I love that because it shows how some of these nimble companies can pivot along with the economy. And instead of just an old industrial giant, it is now pivoting into something also more about AI. I will also just quickly add, the 3-month moving average of small business formation is up 15% year over year. And it's solopreneurs.
Right.
Because if I want to build a business on AI, I can do it. And I now don't need all of the back-end office stuff that made it so costly.
I love
this. I'm able to do a solopreneur and start all these new business formations.
So they're right. I saw a story, one-person businesses, but millionaires among one-person businesses. That's kind of what you're describing.
Bingo.
Wow. So if you tax them less, we'll get more of it. All right, Conrad, we got a couple of things to cover. First of all, I don't really care, but should the Treasury bail out the Japanese yen? Okay, this is a financial story. The Treasury is using some special accounts. We can't go too far into the weeds or too long. The yen got very, very low. It's not growing. Their interest rates are probably too cheap, and the yen itself got very, very cheap, which gives them trade advantages. I don't think President Trump likes one darn bit. But how does this play out?
So here's the underlying issue. All of these topics that we're talking about, whether it's interventions in FX markets, or if it's using this Fed repo facility for foreign official institutions, they're all kind of Band-Aid solutions. They don't get to the underlying issue, which I think for the US as well, but for most large economies, there's too much debt. Inflation is too high. That's less of an issue in Japan, but Japan does have policy rates that are too low. So that's the
1%.
issue, the 1% policy rate. And so I think that's the issue that's driving these conditions, market conditions in Japan. A too low of a policy rate is resulting in their currency being weak.
They tax too much. They tax too much.
And growth is slow.
Income tax close to 50%, corporate tax is 30% all in. I tried so hard. The great Shinzo Abe, who was my hero, I loved him. He and I were very friendly when I was in office. One day, we were in the cabinet room having a lunch, Trump and Abe and the people on both sides of the table. And I went through my rap. Don't raise the tax on consumer spending, I said. You should be cutting corporate taxes, you should be cutting income taxes, and Japan can grow the way it did in the 1970s and 80s. And President Trump looks at me and he goes, in other words, make Japan great again. And I said yes. And Prime Minister Abe looked at that and smiled and said, my finance minister won't talk to me. Can you believe that? I've never forgot. So here we are again with the yen. I wouldn't say it's collapsing, but what's it gone from 100? It went from 100 to 165. The dollar, $1 would now buy 165 yen. That's crazy.
Roughly speaking. And then with the intervention, it came back to 155. But as I said, I think this is a temporary fix. The underlying issues are still there. And so I don't think you can resolve it with interventions or with repo facilities. You really have to get to the underlying issue of too much debt.
It's not going to bust the bond market, or is it?
Well,
go ahead, Taylor.
You're the economics major, but 230% debt to GDP, I think, could be a warning signal to us that at some point debt does matter. And I think bond yields in the U.S. are starting to say debt and deficits matter.
Okay, you know what? I have a chart that will back you up on this. All right, we might call this the Dagan-McDowell scenario. We have the 10-year note. The 10-year note yield has gone up about 100 basis points since February, right? Waiting for it. All right, we'll talk about it. And there it is. No, look at it. Undeniable. Okay. And 40 basis points of that has come under the Kevin Warsh regime. So that's just a fact. It's whatever it is now, it's about 470 today. Other point is here, Conrad, take a look at this. Money supply growth. This is from our friend John writing, but it's very important. Money supply growth, 3-month change, is closing in on 9% at an annual rate, okay? And the next chart is the velocity. The demand for money is stabilizing. You see it on the right. That line is across. You can increase the money supply if nobody wants it, or if it's not, if people are into it and the economy is growing and you're pouring money in, that could be inflation. Now, what do you think? Kevin Warsh, the speculation, the September rate hike. I myself hope he keeps rates stable, but these are things we have to watch.
So I think we need to dig into that 10-year note yield and yields, treasury yields in a little greater depth. There's a lot of people who are looking at that yield and saying the market is sort of losing faith in the Fed and losing faith in their credibility on inflation fighting. You mentioned the rise since Kevin Warsh joined. That rise has been in real yields. It hasn't been in inflation break-evens, right? So inflation break-evens are down since Kevin Warsh began his term as chairman of the Fed.
So Taylor, maybe there's no inflation problem. I don't know. What do you think? Give you the last word.
If they're rising because real growth is there, then I'm happy. If we're rising because we're worried about debt and deficits, then I'm not so happy. But if it's because Atlanta Fed GDP in the third quarter is at 6%, I'm all for yields rising if it's a good reason about why they're rising.
Stock market can keep rolling. You know what? It had been flat for many months, right? Kind of during the war flat. Is that fair? Is this a breakout? This could be like...
Look at you. Now you're talking stocks, Larry.
Is this a melt-up?
Is this a melt-up? Look, I love stocks at record highs because people think that it's it's just big corporations making money and screwing the average person. That's not it. To your point earlier, it's investing back in the economy, in the people, and it shows that there's real growth behind the numbers.
That is a perfect segue to our next guest, investing back into the economy. You're fabulous. Conrad, Dequadros, and Taylor Riggs, thank you ever so much.